Welcome, everyone. Let's kick things off by diving into wholesale CBDCs versus retail CBDCs. Essentially, wholesale CBDCs are designed for large-scale transactions like interbank settlements and securities trading, while retail CBDCs are the digital cash alternative for the public.
That makes sense. So wholesale CBDCs serve financial institutions and major players in the market, right? They essentially replace or work alongside traditional reserve balances held by banks at the central bank, facilitating low-frequency giant transactions.
Exactly. It's like a specialized tool for big leagues. Think of it as an exclusive digital resource for banks to settle payments quickly, reduce intermediary costs, and improve overall settlement efficiency.
Right, got it. And what about retail CBDCs then? How would you describe their everyday use?
Retail CBDCs are more like the everyday digital cash we can use to pay for goods and services. They're directly accessible to the general public, offering a secure, fast way to make transactions, both domestically and cross-border.
So, in a way, retail CBDCs could be seen as a modern replacement for traditional physical cash, but with the added benefits of traceability and potentially lower risks of counterfeiting?
Yes, exactly. And there's another twist here. While both wholesale and retail CBDCs provide transparency, the wholesale version is typically more restricted, used by institutions, whereas the retail version can raise privacy concerns, given its potential for real-time tracking of individual transactions.
Yep, that privacy aspect is quite tricky. Right. Speaking of privacy, don't you think retail CBDCs might lead to the central bank having too much insight into personal transactions, thereby raising red flags among privacy advocates?
Absolutely, that's a major concern. With retail CBDCs, the central bank could, in theory, monitor every transaction made by a person. This level of oversight isn't usually present with physical cash. It's like turning the dial from cash anonymity to digital visibility.
True, that raises ethical debates. I've heard that the design and features of retail CBDCs really depend on the central bank's objectives. For instance, the digital yuan is tailored for China's unique needs, whereas other countries might go in a different direction. Is that accurate?
Definitely. The specific design choices, such as interest rates on CBDC deposits or the limits imposed on holdings, can be varied. For example, the People's Bank of China developed the digital yuan, whereas the Bahamas and the Eastern Caribbean have launched their own versions, like Sand Dollar and Digital Eastern Caribbean Dollar, respectively.
Right, and wholesale CBDCs, on the other hand, are currently more in the pilot testing phase, aren't they? Banks like those in Canada, Japan, and Europe are experimenting with them to facilitate interbank settlements.
Yes, they are. It's interesting because wholesale CBDCs can even be used as collateral in financial transactions. Imagine banks using these digital currencies not just for payment, but to manage and mitigate risk. It's like having a super flexible tool for both liquidity management and monetary
That's
policy.
Intriguing, very intriguing indeed. That's a cool point. But I wonder, don't you think the potential for increased efficiency and reduced costs in interbank transactions makes wholesale CBDCs almost too appealing? I mean, if they work as advertised, traditional systems might just be rendered obsolete.
I get your point, but let's consider the challenges here. Wholesale CBDCs are designed for a narrow audience, big institutions. The risk is lower privacy concerns and a more controlled, secure environment. However, if central banks don't manage them well, it might lead to unintended consequences, like liquidity issues or even disruptions in traditional settlement systems.
Sure, that risk management perspective is crucial. I see your point. While retail CBDCs, despite offering a lot in terms of efficient, everyday transactions, could disrupt the traditional banking model, reducing the need for bank deposits and intermediaries. That probably unsettles a lot of traditional banks, doesn't it?
Exactly. Retail CBDCs might lead to disintermediation of the banking sector. People could bypass banks entirely for their transactions, which might lead to fewer deposits for banks and in turn might have significant implications for credit creation and financial stability.
Yeah, that's a big shift. So the central banks are really walking a tightrope. On one side, they aim for efficiency and broader financial inclusion. On the other, they must consider privacy issues, potential disruption to existing systems, and the overall impact on the money supply and monetary policies. Is that a fair summary?
Absolutely. It's like they're trying to write a new playbook for a digital economy where every move can have cascading effects. Wholesale CBDCs are more about optimizing back-end processes, while retail CBDCs directly interact with consumers, almost
Right,
like the
very much like a
interface
digital
of the future
interface with
financial
tricky
system.
controls. And what about the technical aspects? Both types might be recorded on a distributed ledger, which improves transparency, but this could also force a rethink about data security, right?
Yes, indeed. The ledger element provides a high level of traceability and transparency that can battle fraud and errors. But as you said, it also means that securing this ledger from potential cyber threats is paramount. It's like having a bank vault that's permanently open to audit, but still needs robust security to prevent breaches.
Yeah, that's a neat analogy. Right. And speaking of cyber threats, do these digital currencies potentially open up new vulnerabilities compared to traditional systems? I mean, aside from privacy concerns, isn't there risk in the technology itself?
Definitely, there's always some risk with any digital system. The security protocols need to be top notch. While the technology can reduce many risks associated with physical cash, it brings a whole new set of challenges like hacking, system failures, or even malicious interference. So ultimately, both wholesale and retail CBDCs need to incorporate cutting-edge cybersecurity measures.
Yep, that's something no system can skim over. It seems like the future of money is shifting more towards a digital and decentralized model, yet still controlled by central banks. Don't you think that it's a fascinating paradox?
Oh, absolutely. It's really a revolution in how we think about money. On one hand, you have centralization with control by the central bank. On the other, you're adopting distributed ledger technology, which is synonymous with decentralization. It's like blending the best of both worlds, but it does create a peculiar mix of control
Yeah,
versus
that tension is
openness.
definitely intriguing. And while we're on the subject, I recall there being a mention of synthetic CBDCs and hybrid CBDCs in the broader conversation. How do they fit into this picture?
Good point. Synthetic CBDCs, for example, are issued by private organizations but function as private liabilities, essentially mimicking a CBDC. Hybrid CBDCs combine aspects of both wholesale and retail features. And then we even have forms like the digital e-cash developed by, say, the People's Bank of China, which is often seen as a unique variant. Each type has its particular pros and cons that central banks need to balance carefully.
Right? It's like having multiple flavors of the same concept. I guess one of the most crucial questions is, with nearly a dozen countries already fully deploying a CBDC and many others in pilot mode, are we ready for a fundamental shift in the financial landscape? Or is this more of a gradual transition?
That's an insightful question. The transition is definitely not overnight. It's more evolutionary. Countries are cautiously experimenting, testing, and rolling out these initiatives while addressing the regulations, technological challenges, and societal impacts as they come. Wholesale CBDCs are in a more experimental stage in many places, while retail ones are beginning to appear in the consumer space.
Yeah, incremental but inevitable, right? Absolutely. And while we're discussing evolution, wouldn't you say the potential for creative destruction in the financial sector is the most compelling narrative here? Traditional banking might be completely reshaped if these digital currencies take off.
For sure. If regulators and banking systems don't adapt quickly enough, we might see a sort of disruption where older models are rendered obsolete. It's similar to how, streaming revolutionized the music and video industries. Traditional methods just couldn't keep up.
Right, that's a stark reminder of rapid technological change. At the same time, despite the promising benefits like faster settlements, cost reduction, and improved transparency, these changes must be handled with caution to avoid instability. How do you see central banks managing this balance?
They have and they must tread very carefully. Central banks are essentially experimenting with policy levers, like influencing interest rates directly through CBDC deposits. This gives them a new, immediate tool for managing the economy, which, if misused, could lead to rapid shifts in consumer behavior. It's kind of like using a thermostat that controls not just the room's temperature, but the entire building's climate.
Yeah, balance is key indeed. I bet. And then there's the regulatory framework, which is something that's still very much in development. Overall, the conversation around wholesale versus retail CBDCs is really about settling on the right policies while leveraging unprecedented technological advances.
Exactly. The promise is huge: increased efficiency, improved financial inclusion, and potentially more effective monetary policies. But the perils, like privacy issues, cybersecurity risks, and potential disruptions to established banking models, are equally significant. It's a classic case of innovation meeting regulation in a high-stakes environment.
Absolutely, it's like dancing on a tightrope while juggling fire. I have to say, though, I somewhat challenge the notion that wholesale CBDCs will always be a conservative choice. Given the rapid technological innovation, might we see wholesale solutions become as dynamic and, well, disruptive as retail CBDCs in the future?
That's a valid critique. While wholesale CBDCs are tailored for institutional use and are designed to be more stable, the pace of technological evolution might well blur those boundaries. We could indeed see advancements where even wholesale structures become agile to the point of introducing
Yep,
new
that's a
forms
fair
of financial
possibility.
intermediation.
So as we look ahead, the landscape for CBDCs is both promising and fraught with challenges.
Exactly. The journey ahead is all about careful experimentation, public trust, technological improvements, and, importantly, maintaining a balance between innovation and financial stability. It will be fascinating to watch how central banks, regulators, and financial institutions navigate this transition.
Absolutely, very exciting times. Well, thanks for walking through these intricate details. The dynamic between wholesale and retail CBDCs certainly frames our future financial conversations. It's like we're witnessing history in the digital making.
Indeed, it's a rapidly evolving frontier that no doubt will reshape our financial world. Always a pleasure to explore such groundbreaking topics with you.
Yeah, thanks for the deep dive.